go. So I'll continue. We plan on all speaking for around 10 minutes or so on the presentation, which should leave us around 20 minutes for questions and answers at the end. If our questions and answers do go for a bit longer, if our 10 minutes all go for a bit longer than the 40 minutes, we still will allow for 10 minutes, 20 minutes of questions and answer at the end. And if some people don't get the opportunity to answer any questions, I will have everybody's contact details there for you to be able to reach out as far as the speakers tonight. And we'll also be sending out a link to a short survey later this evening, if you would all be so kind to fill out, to give us some feedback on how we can better improve these sessions. And hopefully you will all be able to join us for the next one. Fantastic. So the first speaker tonight we're having is Onis. Onis is a buyer's agent located there in Sydney. He is able to assist people interstate in the New South Wales and also out of New South Wales for their property needs. And he will be the first one presenting tonight, explaining a little bit about what he does and how he can help you. So I will just be starting his slide now. All right, over to you, Onis.
Yeah, awesome. Thank you very much for that warm introduction, Lopeye. So thanks, guys, for joining us tonight. You could be anywhere else in the world, but you're here with us, so much appreciated. So yeah, guys, my name is Onis Asari, founder and director of Window Property Group Buyers Agency. Next slide, please, Lopeye. So my background, initially, I'm an electrical engineer by trade, and just working in the field and being on the construction site, working with several developers, I just gained an interest in property. And I also began my investment journey around that time. And essentially what I found was a lot of people were uninformed when purchasing property, purchasing a lot of house and land packages, didn't know how to do their own research and due diligence. I nearly fell into this trap by purchasing a house and land package myself. This isn't to knock house and land packages, but it's just simply to state that there's more than meets the eye when purchasing property. So then I sought to essentially establish my own buyer's agency and help people just be fully informed in the purchasing process. So that's me and a few clients that I have helped in the past. We've been running for about 16 months now, and we've gained tremendous momentum. And yeah, we're just looking to help as many clients as possible with their property needs. Next slide, please, Lopeye. Yeah, guys, so what is a buyer's agent? So essentially a buyer's agent is a property advocate. We're licensed professionals that are here to assist you. We specialize in searching, evaluating, negotiating, and acquiring property on your behalf. We essentially are your property project managers. So we liaise between all stakeholders in that process. So your mortgage broker, your solicitor, your pest and building inspectors, and any other parties involved, whether you're buying as an individual or as a group. We just make the process a bit more streamlined and easy to transact. Next slide, please, Lopeye. And just a bit about what we do. So we essentially find the right property. So property, of course, it's not a one-size-fits-all solution. There's different properties out there, different types, different budgets. So essentially we work with our client to find them the right property that suits their needs. Another value add is access to off-market properties. So about 50% of properties transact offline. They're not readily advertised on realestate.com and domain. So working with a buyer's agent does present that opportunity to these off-market and even pre-market deals, which means that deals that we have access to that are online. We negotiate the offer on your behalf, and we also recommend you to other trusted industry professionals as well. We help you overcome setbacks. So what happens is some people just get, they get too involved with the process. They buy for, they search for a very long time and they just get over it. So working with a buyer's agent can really help you just streamline that whole process again and help you make that purchase. And again, we project manage the whole process for you. And guys, just a few benefits of using a buyer's agent is really you gain an edge by having your own advocate who's representing 100% of your needs. So when you're talking to real estate agents, they're actually working for their client, the vendor. So they're trying to get their client the best price. Working with a buyer's agent, they're essentially trying to get you the best price. So that's a massive point to point out. We understand the complexities and the process of buying properties, and we're objective about property. There's no emotion involved. It's simply about getting you a result. Next, please, Lopeye. We save you time and research. Okay, so research can, it takes the average layman a few months to do. We're actively researching these markets day in and day out. And we have the ability to negotiate and obtain the best price for you and the best terms just by leveraging research and data that's out there. In terms of sourcing the correct property, we do have access to markets that will suit your budget. And these markets aren't readily available to the average layman as well. Some people want properties with specific rental yields and specific prospects for capital growth. We help with all of these criteria. Next slide, please, Lopeye. Yep, just one more click for me. All right, so just a bit about the buyer's agent industry, guys. So buyer's agents, we're up and coming in Australia. There's about 59,000 real estate agents in Australia nationwide, and there's about 4,500 buyer's agents out there. So it's a growing industry and people are looking to use buyer's agents to represent them on the purchasing side of the transaction. This year alone, buyer's agents represented about 5% of all transactions, and that's a growing trend as well. In the United States, buyer's agents are involved in around half of all property transactions. So you can see the massive discrepancy there. Next slide, please, Lopeye. All right, so this webinar is specifically tailored to first home buyers. So I'm just going to cover a bit of the first home grants that are out there. This is specific to New South Wales, mind you. Lopeye, please, yeah, just keep clicking and everything will show up. Pause, yep, awesome. So there's about 6 grants that are currently available and incentives. So you've got your first home loan deposit scheme, whereby you can purchase a house with a 5% deposit. So talk to Modupe about that. New home guarantees as well, whereby you can purchase a new build for around that 5% deposit as well, and it's capped up to 950,000. This is good for single parents with at least one dependent under 16 years old. They can purchase property with a 2% deposit right now. And you've got your first home owner grants, whereby you get a rebate of $10,000, and also your first home super saver scheme, whereby you can save up for a deposit within your super. Next slide, please. Yeah. All right, guys, so how to best negotiate purchase price. So the first step really is seeking pre-approval. So finding out from your bank or your mortgage broker how much funds you have access to the reason why I advise people to do this is simply because there's no point going shopping without knowing what your budget is. So if you've got pre-approval for 500,000 and you end up looking at properties that are 600,000 or 900,000, then you're simply wasting time. So getting pre-approval is a massive way to just streamline that process. What you've got to do also is just look at comparable sales. So what I advise is at least 12 months of property history in the area you're looking at to date. So just look at what properties have been transacting for, compare the area, compare the purchase price, analyze the trend, see how far the median price point has changed 12 months to the time you're looking to buy. Another way to negotiate the purchase price is just findings in the pest and building inspection. So this one, it's a really good way to just negotiate a deal by way of settlement allowance, for example. So let's say if you've got a few leaks, if you are buying established, getting a pest and building inspection during a cooling off period can really arm you if done correctly. You can negotiate anywhere from $4,000 upwards. It just depends. But yeah, just having that report would really support you in that purchase. Communication is important. Always communicate to the real estate agent. Find out why the seller is moving. Is it a divorce? Are they looking for a quick sale? Find out the motivation behind why the vendor is selling, and get personal with the agent too, because that way the agent's going to give you more information, and that's going to arm you really and help you acquire that property. And if the agent is being ridiculous, or if they haven't accepted your offer, don't be afraid to walk away. Okay. And one point I want to emphasize is speed matters, especially in hot markets as well. So doing your due diligence and having your research and all of your ducks lined up really matters as well. Next slide, please, Lopeye. Awesome. So the importance of having a team. So what you've got to do really, and what I recommend before buying property, is just working out who your solicitor or conveyancer is going to be, working out who your mortgage broker is going to be, who your pest and building inspector is going to be, and if you're using a buyer's agent, just talking to them, and whether you have family or friends that are in any of these professions, or asking your buyer's agent for recommendations. It's really important to let them know of your intentions of purchasing property. That way everything's streamlined, and you're not kind of scrabbling last minute to find a good conveyancer or a mortgage broker during that whole purchasing process. Yeah, next slide, please. Yeah, spot on. So guys, 7 mistakes to avoid when purchasing property. Again, not knowing your budget, so pre-approval, really important. No point going shopping without funds, without that credit card or debit card, if you will. And factoring silent costs. So silent costs being the fees of your solicitor, fees of the pest and building inspection, any miscellaneous costs, whether it's just simple repairs that the property might need. Trying to gauge that at the beginning of the purchasing process is really important. And buying with emotions also. Trying to eliminate as much emotions out of the purchasing process as possible. Another mistake that people think is that the real estate agent works for them. They really work for the vendor, whereby they're trying to get the best price. So essentially relying and depending on an agent, they've got about 50 purchasers talking to them at any one time. So you've got to always get in front of their face, text them, call them, get an update, chase them up, send emails, send WhatsApp messages so that they can consider your offer and keep you in the loop. Understanding that property works in cycles. So certain markets peak at different times. So if you're buying at the top of the market, bottom of the market, in rising or declining markets, being informed. poor property choice as well. Some people buy in bushfire zones and floodplains. They buy along flight paths as well. So when airplanes are flying over, it does get quite noisy. So just doing your due diligence and making sure that you know that you are happy with your purchase, and really buying in the wrong location. So when purchasing property, you've got to factor in the lifestyle as well. So you're not just buying a property. For some people, you're buying a lifestyle as well, whether it's proximity to amenities, beaches, shopping centers, schools for their children. So lifestyle is a really massive thing. And even if you're buying a rundown property that's in a really good location, over time, you can always renovate that property and just work on it and essentially convert that property into your dream home, or even upgrade at a later stage. Next slide, please, Lopeye. So in terms of opportunities right now, rent investing is a massive opportunity for some people that are priced out of the market right now. So renting, just building their portfolio whilst renting, and eventually purchasing their principal place of residence, because capital city property markets have stepped up into another gear. So there's a lot of people that are happy to pay way above asking. Interest rates are relatively low right now, or really low. So you should consider purchasing now rather than later. Looking out of state as well, so interstate opportunities whereby there's affordability, that's another option as well. Next slide, please. And I just want to highlight the cost of inaction, guys. So there's a massive thing called buyer fatigue. So you can get tired just from researching and looking, and and essentially getting disappointed, going to auctions every weekend and open homes and all that kind of stuff. Paralysis by analysis, just looking at so many options and opportunities, and then you're making offers, you're missing out. These things take time, and eventually what happens is that you don't end up buying, and that's the tragic thing. And then you forego all that compound growth that you could have achieved by just simply having a strategy in place and really streamlining that whole process, not focusing on too many areas, focusing on a few areas that tick your boxes in terms of your budget, and really executing a purchase there. So that's essentially the opportunity cost. So all that time and no execution, that is painful. Also, in certain markets, property prices have risen, and I understand that lifestyle demands do creep up, and people forego purchasing property, and then when they revisit it, they're like, look, the market has moved without me. That's still okay in a lot of situations, because there are other markets, there are other opportunities. You can still rent, invest, and do other things also. And timing the market versus time in the market. A lot of people want to time the market. They want to time when house prices are cheap, when it's going to decline, the crash, all that kind of stuff. But another thing to remember, that if you're in it for the long term, real estate has been a great performer in terms of assets. So just being in there for the long haul can really help you greatly. Next slide, please. And thank you very much, guys, for tuning in. That was awesome.
Well done, Onis. Thank you very much.
That's a photo of me and a client that I helped buy. And my contact details will be available after this whole webinar. Thanks, guys.
Yeah, well done, Onis. Thanks for going through that and explaining all of your details as far as your processes. I'm hoping people set up, and like you mentioned, we'll have your contact details at the end. Next up, we will be introducing our very professional and fantastic mortgage broker. and she will be going over the lending processes with everybody. And we are excited to see what she has to say. And I will start the slide now. One moment.
Hi, everybody. Good evening. Thank you so much for coming to today's webinar. My name is Modupe, and thanks for the introduction, Lopeye.
Sorry, it's still not moving across. Let me stop and start.
Okay.
Get lights at the stop and started. There we go. Share.
Great. Yep, like Lopeye mentioned, I'm the lending specialist for GTM Finance. I help provide lending opportunities to first-home buyers and investors looking to purchase a property. Tonight, we're here to give you an insight into how we can help you get the best opportunity when you're ready to purchase a property. And we would ensure that you do not fall into the trap of, applying for a loan when you're not ready. Buying a house is typically the most expensive purchase you would make in your lifetime. So it's really heartbreaking to see people trying to apply for loans year after year without the right information, thereby getting the loans declined. Next slide, please. So you might be wondering this multi-million-dollar question: why should I see a mortgage broker instead of talking to my existing bank? There are different ways, there are a lot of reasons why you should speak to a mortgage broker. In general, a mortgage broker works in your best duty, and this is legislated. And as of date, 66% of new loans written today are being written by mortgage brokers. I, as a mortgage broker, I work with over 30 lenders, and I would ensure I help you get the best deals that would suit your situation. Next slide, please. And when it comes to eligibility for a loan, it basically just draws down to you being an Australian or New Zealand citizen residing in Australia, or a permanent resident residing in Australia. Next slide, please. Yep, deposits. This is also a really common question a lot of people ask. So I'm looking to purchase my property. How much deposit do I need to purchase a property? The bank would usually require a deposit between 5% to 20% of the property value. So if you're looking to purchase a property around 500,000, the bank would require something around 100,000, which is 20%. So if you're paying less than 20%, you would pay a fee called the lender's mortgage insurance. And while you're talking about your deposits, you have to factor in things such as your stamp duty, your lender's mortgage insurance, your conveyancer costs, your building and pest costs. So all of those deposits actually would be factored in when you're ready to get your property. And your stamp duty differs from state to state, which Renee would also shed more light into. Next slide, please. So borrowing power assessment. So many people ask, how much can I borrow from the bank? Your borrowing power assessment is being calculated based off of your household income, your deposits, your living expenses, how many kids you have. We also factor in if you have student loan, if you have car loan, if you have credit card, and other debts that you would have. Even if it's an overseas debt, we usually factor this into how much you can borrow from the bank. So if you're looking to purchase a property in the next 3 to 6 months, it's better to get a confirmation letter of pre-approval from a broker. What this does is it gives you the confidence to shop around for properties. And it also gives you the confidence to sign an unconditional approval and also buy at auctions. Next slide, please. So now that we know what our deposit is, we know what our borrowing capacity is. What else does the bank look at? The bank would look at your credit report. If a bank says your credit report isn't that great, this might be a risk in you getting your loan declined. So what would affect a credit report is you not making your payments on time, you forgetting about those Telstra bills or moving houses and not changing address and not paying those bills. So this can cause default on your credit file, this can also cause so many issues with your credit report. So if you have number of inquiries on your credit report as well, this can also make the bank, just think about you being an higher risk of they not lending you a loan. So there are ways to go about it. Usually we will always recommend our customers to check their credit score for free using Equifax, and definitely talk to a mortgage broker before applying for a loan. Next slide, please. Thank you. So now that we know what the bank is looking at before we purchase a property or before getting a loan, now we can talk about what sort of loan product would I get? Would I get a fixed rate? Would I get a variable rate? Fixed rate home loan means your interest rate is fixed for a certain time, and your interest rate is the same for that period of time. So usually your fixed rate will be fixed for about 1 to 5 years. And if it's by the end of the fixed rate period, it would revert to the standard variable for that point in time. And it has its own advantages and its disadvantages. Some of the advantages that comes with a fixed rate is budgeting is easier, which is really good for first home buyers. You're able to make predictable repayments at a fixed interest rate. And when interest rate goes up, your rate wouldn't be affected. Say, for example, you have an interest rate of 2.5% and interest rate goes up by 0.5%. Your interest rate wouldn't be affected during the period of your fixed rate. But some of the disadvantages that come to the fixed rate is you would not benefit from reductions when interest rate drop. And we've seen this over the past over 2 years. When interest rate has dropped, people who were on fixed rate had to break their rate early, and they had to pay something called a breakage cost or exit cost. Also, if you have a fixed rate, you would have cap on your repayments. So whatever amount you're paying per month is the amount you would pay per month. You wouldn't be able to pay extra repayments or have an offset or redraw account. And if you do have a redraw account, say the bank would only allow you pay extra 10,000 during that loan term, and you wouldn't be able to access it until after the fixed rate loan term. Next slide, please. So what is a variable rate? Of course, variable rate is the opposite of a fixed rate. Variable rate fluctuates as the market fluctuates. So if the market changes and fixed rate goes up by 1%, you would be paying extra on your repayments per month. And with variable rates, there's always the advantage and disadvantages as well. You have freedom and flexibility on your repayment. You can always pay extra. You can always make use of your offset or redraw account to make extra repayment to reduce the interest that you pay over the life of your loan. And for the disadvantages that comes with variable rate, you can imagine it would be interest rate changes. So you would have uncertainty in your repayment. Also, you would have added cost on loan features. So if you would have an offset account or a redraw account, you would definitely have costs on such loan features. And budgeting can be very difficult when interest rates goes up and down. And so if you're looking to get a property and you do not have enough savings or you do not have enough deposit, there are ways to go about it. We can always consider ways such as a guarantor loan. And this is your parents using their property as a security for you to purchase a loan. You do not need deposit for this at all. And you can borrow up to 105% of your property value. And that would factor in your stamp duty that you're paying. And there are also various government grants and incentives. And some of these differs from state to state. And Renee would also shed more light on that. And there's also a way to go about it by you get a non-refundable gift from family and friends. And with this, you would definitely be able to get you will definitely be able to get a property. So feel free to speak to a mortgage broker when you're ready to get a loan, because we can always factor all these situations into place. Thank you so much.
Well done. Thanks so much for that information there, Modupe. We do appreciate it. Hopefully everybody now knows what they need to be able to be confident in getting a home loan, and hopefully you will know to speak with a broker. Don't try and go to the bank first, because like you mentioned, they won't necessarily have your best interest at hand. All right. Next up, who I'll be introducing is Renee. Renee is a solicitor, also based in New South Wales in Sydney, and she is able to assist clients when it comes to contracts and reviewing of loans and a whole of contracts and a whole bunch of other things, which she'll be able to do a better job of explaining than I am. So I will be switching over to a slide where she'll be able to get started. So
thank you.
No problem. Start the slide, 1 moment. No, go ahead. Thank you.
Thank you so much. Firstly, everyone, welcome and thank you so much for spending your evenings with us. If you are a first home buyer, I think you being here tonight is amazing, and good on you for coming here tonight and seeking out that additional knowledge and expertise and listening to experts in the field. I did not do that when I was a first home buyer many years ago, and I really wish I did, because there's such valuable information out there and available, and so many people that are willing to sit down and give you information that will help you make the right decision and and give you a hand to hold while walking into this, really exciting but nerve-wracking process. So congratulations and welcome. Next slide, please. This is me, Pizzini Lawyers. I am a solicitor. I have been a solicitor in New South Wales for 6-7 years, and I've been working in the legal field for about nearly a decade. It sounds long. It's not that long when you think about it. Next slide, please. A few fun facts from buying property. So what people don't realise is the rules are very different in every single state that in Australia. So New South Wales compared to Queensland, the law is so different. It's like the opposite ends of the spectrum. Just for a bit of knowledge, I practice in Queensland, New South Wales, South Australia, and Victoria. So those are the 4 states that I can assist you in, and those are the 4 states that I practice conveyancing in. So the sale and purchase of a property. Again, buying property does not need to be that stressful if you have the right people in your corner. And I say that hand on heart because I've seen owners prepare some wonderful outcomes for clients. And I'm forever messaging him. And I'm like, how in the world did you negotiate that price for that client, for that house? How? So it's just about having the right people in your corner, and it doesn't need to be that stressful. And if you are a first-time buyer, there's lots of really, really great government assistance out there. It's just about understanding how to tap into that government assistance, which I'll talk about in a little bit later. And lastly, stamp duty. Stamp duty is the great tax of Australia, and it's that added expense that you do need to calculate in addition to your borrowing capacity, because you do need to pay stamp duty. Of course, it can be added to your loan, but it is a large expense that needs to be included and needs to be thought about. Next slide, please. Thank you. A contract for sale. A contract is the exciting, very large agreement which specifies the terms and conditions between a buyer and a seller, and it specifies all the terms that would be relevant to that purchase or that sale. It's important that people realise those contracts are prepared in favour of the seller, because that's who prepares the contract. So it's really important that purchasers get those contracts reviewed before signing on the dotted line, so that they understand the risk and they can minimise the risk. A purchaser solicitor does have the ability to negotiate terms of that contract prior to signing. So for example, the standard settlement clause in a contract is 42 days. That's the standard, but it could be changed depending on what the seller has put in there. But there are circumstances where a purchaser says, I need a 3-month settlement. Do you think the seller would be open to that? And sometimes they are. And sometimes that 3-month settlement allows the purchaser to save that extra pretty amount of money, or whatever those circumstances may look like. So negotiating those terms of the contract is really important, and understanding what the contract means, again, really important. So don't miss that step if you're in a rush. Take the extra little bit of time and make sure you do it right from the beginning. Next slide, please. Sorry, next slide again. Thank you. Conveyancing. So what is conveyancing? Conveyancing is the process of purchasing property. I will make it sound as simple as I can because that's my goal in these processes, is to keep them simple because they don't need to be complicated. First step, understanding the contract, getting the contract reviewed, signing, paying some money. And then of course, once money has been paid, we have a little bit of a period in between signing the contract and settlement. And settlement is when the lump sum of the money is paid. And finally, keys are handed over. So the most exciting bit, right? When you get the keys to your new place. Next slide, please. I will talk about New South Wales for a moment, and purely New South Wales, these particular rules are very different per state. So please seek out assistance if you would like some guidance on your particular state or a different state that's not New South Wales. But for your knowledge, in New South Wales, in order to obtain the first home buyer's benefits in New South Wales, there are 4 rules that must be met. The first one is you must be over the age of 18. You must be an Australian citizen or a perm resident. You cannot be a foreign resident. You must be a perm resident. You must have never owned property in New South Wales before, or Australia worldwide. And also, and lastly, you must live in the property for a continuous period of 6 months in the first 12. And when I say continuous, you can't just go live in there in a month, rent it out for 3, go live in there a month. No, you must live in it for 6 continuous months within the first 12, and you are able to tap into this scheme. So what do you get? If the property is an existing dwelling, meaning someone has lived in it before, it's standing, you can see it, and it is under the value of $650,000, then yes, you may get a full stamp duty exemption, which is a lot of money and a great incentive for first home buyers. If they're buying a property existing, which means someone's lived in it, you get a full stamp duty exemption. If the property is an existing dwelling between $650,000 to $800,000, you're entitled to what's called a concession of stamp duty, which is a discount. That discount is quite attractive when you look at the bigger scheme of things. You could be saving almost nearly half of the stamp duty amount if you purchase a property within those limits. Next slide, please. More benefits if you buy something brand new. Brand new could mean off the plan, or it could literally mean no one has lived in that property. It's recently been constructed. It's pretty, it's brand new. In those circumstances, you get an added benefit. If the property value is under $600,000, you may tap into a $10,000 grant, which will be given to you from the Australian government at the time of settlement, which is a wonderful incentive if you buy a brand new property. So you also get the full stamp duty exemption, and you get this wonderful, very pretty, attractive $10,000 grant, which could, buy all your furniture and things like that. So it's a really great incentive for buying brand new. If you're buying a home and land package, or if you're buying separate contracts where there is a separate land and a separate build contract, as long as the total amount does not exceed more than $700,000, then you can still tap into this scheme and tap into the full stamp duty exemption and the $10,000 grant. Again, New South Wales, these stats are New South Wales. If you would like me to explain to you the varying schemes and first home owner benefits in Queensland, Victoria, or South Australia, please don't hesitate to send me an email, give me a call. I'd love to have a chat. I can explain that to you, because there are some great schemes out there. It's just about understanding which schemes are available to you and what state you're buying in. Because if you're in Queensland, but you're buying in New South Wales, then the New South Wales schemes applies, and obviously vice versa. So again, there's so much wonderful thing. There's great information out there. Don't hesitate to reach out to myself or my colleagues here. We can help you. I'd love to help with some, information and guidance and wherever I can. Next slide, please. For a bit of a benefit for those attending today, I will offer a bit of a discounted legal fee. I'm happy to offer a $1,500 legal fee. My fee is normally $2,000 for purchases or sales. Happy to look after you. Just please mention that you were here tonight and watching this great webinar. Again, thank you for being here. Thank you for listening, and I'd love to speak to you again. Thank you.
Fantastic. Thanks so much for that, Renee. I hope a lot of us picked up some great information on regards to all of the different things that can be understood and looked at, especially when it comes to contracts. And yeah, it seems like there's great incentives there in New South Wales for purchasing property. And I think we have a few here in Victoria as well. So like your last slide said, best time to get in is now and not in tomorrow or in future. Awesome. All right. So next up tonight is myself. And by all means, it's last but not least. And let me just, yep, you guys are seeing that now. Fantastic. Pull this up and I'll start this slide as well. Awesome. So general advice warning, this was applicable to everybody's slide. So just didn't make it onto the first presenters that switched later on. So any advice from this webinar is general of nature only and has not been tailored to your personal objectives, financial situations and needs. Please seek personal advice prior to acting on this information. Any advice from this webinar has been prepared without taking account of any of your objectives, financial situation or needs. Because of that, before acting on the advice, you should consider the appropriateness to you, having regard to your objectives, financial situation and needs, okay? So a bit about myself, I'm a financial advisor, some qualifications, Master of Finance, Bachelor of Science, Diploma of Financial Planning, Certificate for in Mortgage Finance and Mortgage Broking, and also just recently completed the SMSS Specialist Accreditation. And a lot of people probably wondering what a financial advisor does. So the main 4 areas of financial planning, there are a few other ones, and some financial planners do specialize in different areas, is personal insurance. Personal insurance encompasses and covers your life insurance, total permanent disability, your income protection, which covers you if you are injured or sick and cannot work due to sickness or injury, and also trauma and life cover. So life, TPD, income protection, and trauma is 4 of them. You can hold these type of insurances within your superannuation, except for trauma, and you can also hold them outside in your own name. Okay, so main difference, some of the differences is cash flow and also some definitions. If anyone wants some more specific details, reach out to me. We also assist clients with their superannuation. You have retail superannuation funds. Most people are in industry funds, and some people also have self-managed super funds. Essentially, the main 3 things we're looking at with people's super funds is the fees they're receiving, the asset allocation, which is how you're invested, and also the performance, how it's growing. Because of course, if you're having to mandatory contribute or have money going to super, you want to make sure it's growing as best as it can. We also help clients with investments. So I'm a goals-based advisor, which indirectly means I help clients achieve their goals through investments. So if they have investment goals, it is curtailed to their goals. For example, if somebody's looking to purchase a house versus somebody who's just who has a house and is looking to invest, the investment advice I'll provide for 2 of those individuals will certainly be dependent on which one of those, since their circumstances are very different. They also have other asset classes that clients can invest in as well, which is also equities, shares, property, bonds and commodities. And there's also cash flow modeling and budgeting that I can help people prepare. So how this relates to purchasing property as well, or looking at for first home buyers, is a lot of clients that I come across has that goal of being able to purchase a property, but they have some a bit of restrictions on being able to get there and don't know exactly how to achieve that goal. Okay, so one general information that I've seen that a lot of people do that works fairly well is the notion of paying yourself first. So what it means to pay yourself first is having, account where you can have money that you're not particularly having access to or spending. And for this example, let's say household income after taxes is $7,000. I know that's fairly high, but let's say that's combined income, and the expenses is $4,000. that would leave $3,000 that could be saved. So after the person's got paid their $1,500 per paycheck or $3,000 of savings monthly, if they first put that in their savings and then just survive off of the other 4K, that I usually see people are able to do a lot better in as far as continuing to keep up with their savings. For example, if a client was able to save $3,000 a month in as short as 16 months or a year and 5 months, they would have been able to save $50,000, which would be nearly 10% towards a home deposit, not including, of course, duties and other fees that needs to be paid. So a lot of people think it takes so many years, 5-10 years to save. That's what the media, likes to pipe up about, because they want everyone to spend and get out there and max out their credit cards. But as we've just explained here, it is possible to save up a deposit much quicker if people are disciplined on doing that. And another thing I want to highlight and touch on in regards to what's affecting property markets is inflation. You've probably hearing that buzzword around on TV and the news and in other people's conversations. And essentially, inflation is the rate of increase in prices over time. The government aims to keep inflation at around 2 to 2.5%. And due to the pandemic that we've been in, governments have been trying to stimulate the economy. And what they've done to do that is they've been printing money and currency, which is effectively known as quantitative easing, right? So with a lot more money in circulation, what's happening is your purchasing power, the amount of money you can use to purchase items is going down that relative to what the items are costing. As you see this chart here, it shows coffee was 25 cents, a cup of coffee is 25 cents in 1970, which in 2019 was all the way up to $1.59, which is a 600% increase, right? So due to that extra stimulus and amount of money in circulation, price of everything has been going up and has gone up due to this extra cash. Just a few examples here. This is based on the US Consumer Price Index, but since, of course, Australia, we do import a lot of our goods and services, a lot of these prices have been relative to us. You've seen the price of beef has gone up 24%. Price of used cars, a lot of people have seen it more than new cars. You're lucky to get a new car in the lot. Hotels have gone up 26%. We've also, gasoline or petrol was down to $1 during 2020, 2021. Now it's closer to $1.80 for a regular unleaded. So certainly we're all seeing the pinch and the increase in costs of things going up. So how obviously this is relating to property and is interest rates. Okay, so the RBA, Reserve Bank of Australia, who's the one who decides on interest rates that lends to banks, when they want to stimulate the economy, they decrease interest rates. People don't get as much money to save in their bank account, which encourages people to be spending outside. And the other way around, when there's too much spending going on and they want to have people save more, they increase interest rates, which then helps people save some more. So they have those levers to push to try and get the desired result. As we've seen over the last 3 to 6 months, interest rates are on the way up. And how this is obviously resulting is two main things. One, the purchasing power of people, serviceability, as Modupe explained, is reducing. So somebody on 100,000 who could potentially borrow 500,000 before might only be able to be borrowing 400, 450,000 or a lower rate, depending on how much they increase interest rates. So due to the low interest rates that we had before, prices obviously skyrocketed, as you've seen over the last years, which has made it a lot more difficult for people to get in the market if they already were not in there. To show examples of exactly how much the rates has increased over this short period of time, as we see Sydney, December 2020, the median price on houses was 1.05 million. And currently the median price on houses in Sydney is 1.6 million. So that was an increase of 33.1% within those 12 months. So time in the market certainly is, again, beats time in the market. And a lot of people are losing out on a lot of equity appreciation and growth by not being having property. So it's definitely something people should consider as part of their portfolio due to the advantages and the appreciation that some people have been able to receive. As well as, as I was mentioning, inflation, one of the ways people can try and hedge inflation, or I've seen, and this is generally general advice only, is having their assets or having their wealth stored up in things that are physical assets like real estate and gold, due to the fact that obviously that cannot be duplicated and printed. So it is a fairly good hedge against inflationary pressures. And hence, since that much more people are looking to get out of fiat, which is currency, that has also escalated and increased the amount that people have put their money into property. So lower interest rates, people trying to get out of cash, those are all of the recipes that have increased rates. So property prices to where they are today. And lastly, I would just want to go over a quick scenario. Of course, not everybody has to rent, has to buy, they also can rent. And some people might be in a position to buy and they might be asking themselves, should I rent or should I buy? Which one should I do? That's a common question that clients come to me and ask as well. So this example, it's two identical properties in the same location. They both cost $500,000. With option one, the individual is renting and the rent is $400 a week, which in a year would cost that individual $20,800. It is a sunk cost, meaning they are not going to retrieve that money back from the landlord, because the landlord obviously keeps all the rent, and you know that's the price of getting to stay in the resident. And the other option is to own or get a mortgage on the property. So as we went in our first example of saving that $50,000 over the year and 5 months, the remainder would be $450,000 loans plus, some extra stamp duty or costs. A repayment on a $450,000 loan with a 3.0 interest rate, which of course that is can vary. Some rates are still a bit lower than that. That would cost the individual $1,897 per month, or $22,764 a year. Not all of that amount is interest. Some of that repayment is principal, which is you paying down your home loan itself, and the other parts of that is interest that just goes to the bank that you don't also sunk costs you do not get back, right? So $13,500 basically is the portion you don't get back, versus someone who is renting who also didn't get back $20,800, right? So the difference between $20,000 and $13,500 is $6,500. So someone looking at those two examples might think that, oh, wow, $6,500, that's extra money in my pocket. And that, is putting me in a better position to do some other things with that money in the future. But that isn't the whole picture. Remember, in the few slides before, I mentioned that prices in Sydney went up from 1.05 to 1.6 million within a year. So if that same property that this individual bought who owned the property also went up similar, close to this amount of 50%, not only did the person be saving $6,500 per year in owning versus renting, they also are having that benefit in equity. So if that person sold 12 months after they purchased the property, they will potentially gain $500,000 from Sydney. It was a Sydney home, average Sydney home. And I'm not sure on other states' laws, but in Victoria, you do not pay any, I think it's nationwide, you don't pay any capital gains tax on assets on your principal place in residence and selling after 12 months. So certainly that's quite a big difference between the two. And a lot of people could understand what type of, differences there would be if they chose to rent instead of owning. And though it's not always obviously rosy and it's not always going up all the time. Some risks people should consider is prices do go up and down. And owning also does reduce your ability of mobility. Some people, if they do need to move out and move for a job or something, potentially, there could be issues with tenants and not get rent, which would then mean everything is paid by the owner. So certainly everyone's situations and circumstances is different. And I'm able to assist clients in regards to doing that number crunching and letting them know what type of positions they would be in if they were looking to own versus rent, and also acquisition of properties later on in the future as well. So again, to summarize, not all properties are the same. When somebody's looking to purchase, just buying any property is probably not the best way to go about it. Houses are different assets to townhouses, which are different assets to units and also apartments. So having a good understanding, of course, Onis is there to chat with people to give them that understanding on the pros and cons on each of those separate dwellings. And home purchases, as we've all been saying, the theme tonight is one of the largest purchases people make. So knowing exactly making sure you're doing the right thing will obviously assist people in making sure they don't regret it in the future. And financial advisors, as myself, not all of them do, so make sure you specify if you're speaking to another one, do have great knowledge on property finance and can also do some modeling to give them assistance with that. So yeah, what purchase you make on your first property will have a huge impact on your borrowing capacity and purchases you'll be able to make in the future as well. So you certainly want to start on the right foot, and all of us today, are well equipped to give you relevant information to know what will work well in your circumstance or situation. All right, so that wraps up my my presentation on financial planning and in property. So right now, for the rest of the meeting, I see we've gone a little bit over on time, but not too much over. We'll take another 15 minutes or so on answering questions. Since everybody is on mute, you all have the opportunity to write in the chat and also writing the questions to direct it to either one of us, to Modupe, the mortgage broker, Onis, the buyer agent, Renee, the solicitor, or myself, the financial advisor. Of course, everything is general in nature. And if you do not get the opportunity to ask your question tonight, I will obviously send you out an email, which will have a survey, and you'll be able to request to speak with anybody if you wanted to have some more questions answers for yourself, or alternatively, all of our contact details are listed right here, where you can jot down our phone numbers or email addresses to reach out to us that way as well. All right, thank you very much, and thank you for attending. For those of you who aren't going to stick around for the question and answers, thank you for joining us tonight. We plan on having another session on investment properties in a fortnight from now. It would also be on Thursday at 7:30, but hopefully, yep, we'll be able to catch up with some of you before then. So again, thank you very much. All right, so Michelle's asked, will the contact details be included in your email with the survey? Hadn't, but in the email I sent out, I will just include this sheet here. So then you will have that accessible, so no problem at all. Is there any question? All right, so Onis, you got a question there?
Yeah, hey, Ochuku. Yeah, so this question, this is a personal question. I'm happy to take this offline, just because one, I don't know your budget, I don't know where you're looking to purchase this house and land package, and there are so many other moving parts. So happy to give you my details and we can just chat about it better and then take it from there.
Thank you, Onis.
No worries, Ochuku. Thank you also.
Next question. Don't be shy, guys.
Ask away, guys.
Ask away.
We're here for you.
Absolutely. All right.
Yeah, that's correct, Michelle. So rent vesting is simply living where it makes sense for you in terms of a lifestyle factor, and investing where it makes sense for you in terms of returns and where the action is happening. So it essentially gives you that flexibility to live where you want and buy or invest in growth areas.
Thanks, Onis. So the next question is on advice on buying as a non-resident. Would you like to take that, Modupe, or would you want me to answer that?
Yeah, that's a really broad question, and advice on buying on as non-residents, because it differs from lender to lender. Well, Adi, if you could please, give me a call and we can chat further about that.
No problem. Thank you. So Renee, you've got a question there. Oh, she's on mute. There you go.
Sorry, I was on mute for a second there. Jeff, you asked if I cater to New Victoria. Yes, I do.
Nice and simple.
not too long of an answer.
Just a refresher, I do cater for Queensland, New South Wales, Victoria, and South Australia, purchases and sales of property.
All right, so iPhone. I wish we knew who iPhone's name was, but the question is, I only have $10,000, but I really want to purchase a house. Can this be possible? Yeah, I think it's a good question, but I want to feel some love too, so I'll answer anyway. So yeah, it depends on the state. So as we both, I think both Renee and Onis mentioned, they do have, because Onis, they do have some grants that do allow people to purchase as low as 2%. So I know that one is single mothers or single fathers as well, single parents. That is also available in Victoria. I can't speak for the other states, or at least those two. And then when you add all of those other grants and incentives that we've mentioned earlier today, that can make it possible for someone to buy with a much lower than usual deposit, right? If it is exactly 10K or not, we'll certainly have to look at the client's situation and see what they're applicable for. So Mr. or Mrs. iPhone, if you are able to let us know who you are, and then we'll hopefully be able to assist you with that some more further. Okay. Renee,
Not
they want you to get qualified so you can help there as well.
I can definitely try. Reach out to me. I'll help you. Don't worry. And if not, I've got colleagues in every state that can assist. Happy to help.
Okay, so I think that one's directed to you as well, Renee.
Is it harder to legally buy property in a state you don't live in as a non-resident? You do not need to live in the state to buy a property. For example, I live in New South Wales and I own property in Queensland. You can own property in any state of Australia. There's nothing stopping you. And your second question is, as a single person with one income, would you be at a disadvantage of applying for a loan? I can't give financial advice, so I'll pass on to someone that can answer that question.
So the question was, would you be a disadvantage applying for a loan? Yeah, so that would actually depend on the client's circumstances. The general advice that I'll provide is, as of now, and rules always changing depending on who's in government, stamp duty is calculated per, sorry, not stamp duty. There is stamp duty as well, but land tax is calculated state-based. So after you reach a certain threshold of land value in Victoria, for example, a strategy a lot of people do is look at properties outside, because of the fact that the land tax calculation is different. Can't get in any more details than that, but basically there are different land taxes depending on the state that you're in, generally for everybody. So hopefully that just sheds a bit more light in regards to that. Peter asked a question: if you have a commercial house, you have missed out on the first home buyer package. So to my understanding, the first home buyer package is for residential property. And though, as far as if somebody can buy a residential property as an investment and then also be able to then still capitalize or still be able to access the first homeowner grants and the stamp duty concessions and things like that, that is a possibility. Of course, it's per situation, per state, but I have seen, variable outcomes in regards to that. So, yeah, Peter, if you want more details or information, feel free to contact us. Manuals, can a non-resident purchase a new establishment? Is yes. What are the process involved in lenders packages? Modupe, do you want to answer that, or you want me to take it?
Yeah, sure, I can answer that. So talking about a non-residents, there are different sort of visas that a non-resident is on, and this really differs from lender to lender. So would be great, Emmanuel, if you could please reach out, and then we can have a chat about what sort of visa you're currently on, and we'll see how we can help you from there.
Okay, thank you.
I think I might add on to that. So as a non-resident, meaning you're a foreign resident of Australia, it's important, and I'm not giving financial advice here, it's important that you understand that you could be liable to a foreign residence tax on the property when you sell it. That tax is 13.5% at the moment. So it's something that you need to consider and understand if you are a foreign resident buying in Australia.
And that's federal, that's across the whole country, right?
Yes.
Thanks for that. Any other questions, guys? Well, we'll wait give a few more moments before we wrap up. Okay, yeah, I think that might be all. Oh no, there's some coming in. Now they're all flying through after.
What a wonderful question. Is there anything particular to look out for in legal contracts? That is the best question I've ever read in my life. Absolutely, there is like a million things. It's so important to get contracts looked at and reviewed properly by a solicitor or a conveyancer, because you may not understand the risk associated with something. And I'll throw in an example. In New South Wales, if there is a swimming pool non-compliant certificate, does anyone know what that actually means and what risk that poses to the purchaser? I'm going to pretend that was a rhetorical question and I'll just answer it. If you buy a property in New South Wales and it has a non-compliant pool certificate, it's actually the purchaser's responsibility to rectify all non-compliances, and it must be done within 90 days of settlement. If it's not done, the purchasers risk a substantial fine from council. So that little piece of information is one of the many things to look out for if you're buying a property with a swimming pool. Is it compliant should be your question, and that particular answer will be in the contract. If it's not compliant, the contract should also tell you why it's not compliant, whether it's a gate or missing a sign, or whether there's a big tree next to it, which is a climbable zone, and that poses a risk to public safety. So just one of the many things to look at.
Awesome. Thanks for that example. Very informative there, Renee. Appreciate it.
Yeah.
All right. Broker than agent. So yeah, I can answer that one. So in my experience or my perspective, first people are obviously looking to first find a property, right? So understand what they're looking for in properties, which a buyer's agent is what they kind of do as far as helping them understand that the differences. Some other people can give them some information as well, but that's kind of one of their main objectives and things they help out with. And then simultaneously, I would say also the finance is important, because Onis is a busy man as well and wants to make sure that he's helping clients who's in a position to be helped. But of course, he's a nice guy. You can reach out to him. And then as soon as he's obviously introduced you to a broker, or you reach a broker out first, that won't obviously deter from you getting help with, then once you know what you're kind of looking for, they go hand in hand. So I guess you're not put at a disadvantage if you go to a broker first, right? And then they will understand your circumstance if you need a buy agent or not, or simultaneously if you go to a buyer's agent first, then they'll obviously discuss what lending would be required on if you're able to afford what you're able to afford by speaking to a broker. Yeah. And then usually after that is when you get a contract, which then that's where the solicitor comes into play, which you can, appoint as soon as possible or later on in the process. But the sooner, I'm sure Renee will agree, the better, so that there's no duress or having to rush anything. And then simultaneously at any time, you can have an advisor to help you navigate through the process as well.
Modupe, you've got a question?
Yep, I've got a question there. Just gonna read that out. I use Credit Savvy to check my credit score. Would you recommend me using Equifax? And yep, so the bank uses Equifax really. And as a mortgage broker, I use Equifax as well. So I would say if you could also have a look at Equifax, and Equifax is also free. You have access to one free credit file check per year. So have a look at Equifax and see what your credit score is.
Before you get to the next question, I will just add to that a lot of lenders do have automatic screening that may not even get to the stage of Equifax, right? So you theoretically potentially could get declined applying for something with, let's say, Equifax, and if Equifax didn't include something, or they didn't get to Equifax and they just weren't happy with your criteria when they got there and didn't see the credit score. So the Equifax, even though most likely is going to be included, or their own internal systems is included, we wouldn't want someone to get an unfavorable outcome by only relying on that. So I would also add to that, certainly reach out to a broker, right, to talk about your situation, because the extra value add and benefit a broker has is, once we found lenders that we believe is appropriate or is giving you the best loans, brokers can actually liaise with different internal members within the banks to workshop the deal to confirm and make sure that everything is looking fine. So therefore, there won't be any surprises, unpleasant surprises later on. So I thought I'd just add that.
And
you have another question?
Yep, Michelle, thanks for that question. If you're not quite ready to purchase, would it be good to reach out to a mortgage broker? Yes, it would be good to reach out to a mortgage broker. Because like I mentioned, we can always factor in how much exactly can you borrow, how much deposit do you have, and how much property can you buy. So definitely before purchasing a property, it's good to reach out to a mortgage broker so we can discuss your situation better and see what sort of amount you're looking to spend on the property. So,
sorry, our daughter's joining in the meeting over there in the background, as you can hear. I'll answer this question from Jeff on if you check your credit score on the regular, is it a bad thing? I hear different answers from different people. Generally, it doesn't help your credit score on checking it very frequently, because that can affect the score. But at the same time, I do know someone at a bank who refinanced quite a few times during the year, which I also initially always thought that would help, would be bad. But again, he's a specialist, he worked in there, so he knew how to navigate it. So on a general case, it doesn't help your credit score by doing too many checks. So again, the checks shouldn't be relied upon on thinking that's going to get you approved or declined on a loan. You really, there's a lot of other things that he's looked at. Credit score in Australia is not the same as in the States or other countries, whereas credit scores sometimes, if you're not self-employed, might be a hurdle on just making sure it's satisfactory to a certain extent. Someone can have excellent credit score and still get declined for a loan. And on the contrary to that, someone can have a horrible credit score and get a loan approved. So again, I can't reiterate enough how important it is for you to reach out to a broker to explain your situation. Because if, let's say, a person tries to apply by themselves, which is possible, and they're not successful, now you're in an uphill battle trying to reverse your situation to get a loan approved. And most mortgage brokers do not charge for the consultation, so you're not really having much of a disadvantage from reaching out to talk to them about that. Michelle's got a question on is age a major factor when considering for a loan? And this is going to be, we'll have just one question. This will be the second last question. I'll have one more after that, and then we'll probably wrap up for the night. You will get the opportunity to send it to us. So for that question, I think Modupe, are you answering? You want me to answer it, please?
Yeah, that's all right. Is age a major factor? Yes and no. So it depends on how old you are and what sort of loan you're looking to get. If you're looking to get a 30-year loan term and you're 70 years old, the probability of the bank lending you a loan for owner-occupied property is quite low. But if you're maybe 40 years and you're looking to get a 30-year loan term, perfect. So it really depends on how old you are. And yeah, like you said, it is case by case. Yeah.
And by lender. Some lenders have
Yeah.
more tolerance than others.
That's right.
And probably is another perfect example on where you are, it's dependent on the skill of the broker that you've had. I've had plenty of clients who came to me for financial advice and just in passing conversation said that they weren't able to get a loan because they applied and they said that they were too old. And when I heard their situation, I was like, that doesn't sound like a loan that seemed like they shouldn't be able to get a loan. It has a lot to do with the client's exit plan. And the exit plan might not be elaborated as well in going straight direct to a bank than if they're going to a broker who can actually look at other things like super and other things that can be considered. If it's not included, then it's a actual person who's reviewing the case and file. And if they haven't got that file created perfectly, they might be declined. But then if it's reviewed and has a good exit plan, it might be approved. So getting loans sometimes is not a science. It can be an art, and having a good competent broker can be the deciding factor on getting a loan approved or not. So I sound like a broken record, but keep on repeating it. Have a chat with the broker on that before obviously doing so. And I believe that was that the last question, or was there anything else? Or no, that was it. Sure. Yep. That's the last question, right, guys? Wasn't anything else that came in? No. Okay, all good. So thank you all very much for attending tonight, this first session. You've all been a great guest. We did appreciate your attending with us today, and we hope that you did get some use out of it and information. And again, feel free, don't be strangers, reach out to us. We'll be happy to assist and help. And hopefully we will see you again in a couple of weeks. I will send out some email reminders of event registration, and feel free to reach out to us before then. Everybody,
Thanks, everyone.
Yep, a good night. And yeah, we'll all hopefully see you soon. Enjoy the weekend.